Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated? Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, everyone. Welcome to our live stream this morning. Hope you guys are doing well. Happy Saturday, happy weekend. Hope your weekend's off to a good start. Always like to do my analysis and get everyone prepared for next week and finish off the weekend. It's always a good feeling. Got my coffee, ready to go. I have a lot to go over today, but what I'm gonna do is do my best. I know I say this every week. I'm going to do my best to try to go through each pair relatively quick so we don't spend too much time on each pair. I know we do have quite a few pairs to go over today, so don't want to take the full time. I know I always say that, now I always go over, but I actually do have to get off at 12 o'clock today. So I do have just under 2 hours, so I have to cap it today. But that's okay. That should be the amount of time anyways. So hopefully you guys are doing well. Of course, drop your location in the chat. Drop what pairs you guys are looking at, maybe what pairs you guys traded, any good trades you had, or anything that you see that's setting up. Good morning, Chad. Good morning, Mark. Good to have you guys on. Euro USD. Where are you looking for a Euro USD to go? Looking to go long or short? US 30. Yeah, we're gonna look at that here. What's going on, guys? Good morning. We'll give it a few more minutes to let people trickle on in. Raleigh and Senior Crabtree. Yeah, I'm like 15 minutes from there. Good to have you on, Sam. Thanks for spending your Saturday morning with us. I should say afternoon or evening for some of you all. UJ setting up for long continuations. I would agree. I will be hitting on that pair today as well. Come on, guys, let's get this chat going. I want to get this hyped up. We have a lot to go over. A lot of great setups, actually. So if you guys pay attention throughout the whole session, follow along, write all this stuff down, take notes, jot it down on your chart, I think we're going to be good to go. We had already a lot of pairs and a lot of setups from last week do well. Now, I know we didn't have a formal Sunday market breakdown video that we typically have for those of you who've been following Smart Money Sundays. But for those of you who are in VIP, we did send out a lot of good pieces of analysis. Did short EuroCAD, GCAD, and CAD. Yep, CAD strengthened heavily with NFP. We also had that rate hike again at 25 basis points that the Fed did on Wednesday. Let's see, GU might be a pair. I have a few pairs that I definitely want to hit on today. And I also have a few pairs that if we have time at the end, I'll touch on. If we don't, then I'll just have to kind of skip those today. GU is one of those pairs that is like a up in the air type of pair for me today. Scotland, good to have you on all the way from Scotland. Awesome. Good morning, guys. Good morning. Quick couple of announcements before we get started here. For those of you who've been paying attention to our community within our Discord channel, for those of you who are not in the Discord, please let me know. I can send the link in here. So for those of you who've been paying attention to the Discord, we have finally figured out a solution for funded account management. So very excited for this. This is a great opportunity for everyone who is a funded trader to be involved in a program that manages funded accounts. So we also do pass challenges, of course, like you guys know, specifically on Nova Funding. It's a really good prop firm where you're passing challenges and managing accounts for. Also, we currently do not pass challenges for FTMO and my Forex funds as of right now. We're currently working on a solution to do that, but we do manage funded accounts for them. So for those of you who have hopped on our live streams, we held 2 of them last week, or well, 2 of them this past week. And we know that I just went over some basic statistics with you guys. We're trying to average between 2 to 4% a month, and we have about an 80 to 90% success rate when it comes down to funded account management. So very high probable chance of seeing profit every single month. Of course, nothing's a guarantee. This is an investment. If you have money that you're not willing to lose, then I would not make the investment. So just wanted to touch base upon that. For those of you who have any questions in regards to that, you can send me a personal message. I might touch upon it at the end if I have some time. But of course, today is all about trading. Can't neglect the trading side. Kentucky Derby, I've never been a big fan of horse racing, to be honest with you. I mean, if it's on and I'm not doing anything, I'll watch it, but I don't go out of my way to sit down and watch it. Gold, we don't trade gold, guys. We don't trade gold, indices, any sort of commodity, anything like that. It's just Forex. What I'm probably going to do is if I start to see those questions, I'm just going to ignore them. I'm not even going to acknowledge them. We've been saying this for probably over a year now. All right, we got London in the house. I'm going to start in 2 minutes. I'm going to start at 10 after. It's currently 8 after right now. You guys big coffee drinkers by chance? You always see me drinking a cup. Those of you who may be in the States or maybe in the morning for you, you guys drink coffee? I have like 2 cups right here because I don't have time to go downstairs and get another one. We're doing this live, so I keep pouring this one into my new one. Yeah, I'm spilling. Can't survive without it. Yeah, you're darn right about that. All right, all right, guys, just a quick, remember, disclaimer, reminder. Everything that's discussed in these live sessions are just purely educationally based. This is not signals. This is not, me telling you what to do. We're not financial advisors. I am not recommending anything. I am just going over what I see in the market and my overall opinion and expectation. So for your learning purposes, please do not take these as signals. If you guys want to be professional traders, you have to understand that you can't take signals for the rest of your life. You're never going to be a professional trader doing so. So, take this as an opportunity to go back and reflect on the charts and go back and see what we've been posting throughout these live sessions and learn from the setups and follow along. We will be going over So typically how these work, guys, for anyone who's new, we will be go over just a general market breakdown. It's going to be going over the market and through my lens, through my view, and highlighting some potential setups for you all. Now, of course, this is not signals. This is for you guys to kind of jot down, pay attention to, learn from, so that you can go and apply these same concepts to your own trades and to your own account. All right, so it is 10 after. I'm going to get started here. I'm going to take questions halfway through, so I'm going to do about half the pairs. Obviously, I cannot see the chats as you guys are posting stuff in there and as I'm going through the charts. So if you have questions specific to anything, just make sure to write them down. And then when I stop sharing my screen, we can go in and take those questions. All right, so I'm going to share my screen here. and we will get started. Oops, let me do this. All right, I'm going to first start off by talking about AUDJPY. Now, before I get started, I want to just quickly check. Can you all hear me and see my screen okay? Just drop it in the chat really quick. Just say yes or no. Just so I know that I'm not talking to a wall as I'm going through this. I'm going to stop share just to make sure because I have to see the channel. Okay, you guys can. Okay, perfect. All righty. All right, so all the pairs that are highlighted in red here are the ones I'm going to be discussing. And the ones highlighted in green are the ones that if I have time at the end, I will touch base upon. All right, so it's quite a few. However, that's what we generally do here on Saturdays with these live sessions, is just kind of go through the market and see what's going on. So of course, guys, these setups that I'm showing you here, even if I have the risk to reward tool, this does not mean that I am personally taking these trades. Please know that. Please know that this does not mean that you should just be going in and placing buy or sell limits. Okay, this is for you to help understand. This is for you to kind of see the overall bias and direction, and to hear my analysis on it so you can learn from it, go apply it to your own trades and your own charts. Okay, so that's the whole goal here, because the goal here is to help you guys become consistently profitable traders over time. All right, this is not something that you should be getting on to receive handouts. Okay, I guarantee you, if that's what you're on here to do, you will never end up making consistent profits in Forex trading ever. It's not going to happen. I've been doing this for 6 years. I've gone through pretty much everything there is, signals, hopping around from group to group, you know, everything you can imagine. And I'm telling you right now, if you're just looking for a quick buck, you're in for the wrong reasons, and it's not going to help you. All right. So AUDJPY. So obviously, you know, what I'm going to try to do here is typically what I did before is do a full top-down analysis. I'm going to try not to do that because, you know, like I said before, it takes a lot of time. And from those of you who have been consistent with our live sessions, you guys already know all this stuff. You guys already heard the same breakdowns before, the same top-down. You're not going to want to hear my voice for 2 straight hours. I wouldn't even want to hear my voice for 2 straight hours. So, you know, what we're going to do is kind of just go over a brief top-down, meaning just the general overall direction, and then we're going to go into some potential setups that we could be looking for and an overall directional bias for the potential week ahead. And I always say potential just because, again, nothing is guaranteed. Like I say, you know, we could have all the confluences in the world. Everything can meet our rules. We could think prices going long and have such conviction for that. But at the end of the day, could it go in the opposite direction? Sure. We just have to reevaluate. But again, these setups are very highly probable. It's just following our strategy. But at the end of the day, what we have to know as traders is that, you know, just because you have all of your confluences and all of your, you know, rules being met, that does not mean you need to over leverage on positions. It just means you need to attack the market the same exact way you did before. Next setup comes around. If the confluences aren't there, you sit on your hands. If they are there, then you attack the market with confidence with the same risk that you were before. Because trust me, guys, I have had plenty of trades in my years of trading that I have thought that there's no way in the world that this trade could lose. But some of them did. And that's why it's so important to understand that it's not a game of how many wins and how many losses could I have. Like I said in the last live session, people who are trading and caring about all the wins and losses and getting emotional when they lose and getting euphoric when they win, it's all just to flatter your little ego. It really is. Okay. We have to understand that trading is just a numbers game. It's about putting together a system, a systematic, streamlined system that you can follow every single time. And if you start deviating from it, it's not going to end up well for you. But we have to also understand that trading is never 100%. So if you're following the strategy and you're losing trades, it doesn't mean you're doing anything wrong. It just means that you're on some sort of losing streak. And that's okay, because we need to stick to a strategy, stick to a system, stick to your trading plan. And when you do that over the long period of time, which typically 99% of people don't want to do because they don't want to delay gratification. That's just how the world is. Those people will obviously quit and fail, and they'll just remain broke their whole lives, but that's on them. But the people who stick with it and have the understanding that trading is a long-term game and that profits will come and generate over the long term through consistent practice and discipline within your strategy and your system, it's going to reward you in the end. So for instance, like I think it was 2 weeks ago, we had a couple of trades on the yen. We had a trade on, I actually did not trade this. So remember we talked about this last week. We talked about, and this was Sunday right here. So Saturday was like right in here, right? So we talked about the fact that we wanted price to come back down into this level of demand, right? So this was the case for a lot of other yen pairs across the board. And we ended up talking about one of them on the live session and then 2 more of them on USD/JPY throughout the week within our VIP community. And all 3 of them hit take profit, and they were huge risks to rewards. I think we made a collective 22% on just those 3 trades that took a matter of less than a week, just a few days. So that just goes to show that even if you're on a losing streak, or you've had a bad month, or you've had a bad quarter or a bad year, it doesn't matter, because you know that the system in which you're trading, if it's a profitable system, will yield overall profit and positive returns in the long run, right? People think too much on the short term and not a lot on the long term. Why? Is because everyone wants to make $1 million overnight, and no one wants to ever fail or lose one trade. And that's the mindset that 99% of the world has, and that is why they're not a part of the 1%. So we have to start thinking like the 1%, not like the 99%. So yeah, I'm going to be honest with you guys. This year has been probably the trickiest year of trading since the start of my trading career back in 2017. And I'm still in the positive. Why? Because of trades like UJ, because of trades like CADJ that we had 2 weeks ago. So I don't care if I lose a trade. Doesn't matter, because I know I'm following my system, because I know that eventually it will come back around and I'll hit a home run trade, or I'll hit a series of good trades that takes care of all the other losses that I've had before. Trading is not a game of how many wins can I have or my win rate. It's about risk to reward. It's about discipline and psychology. It's about following your trading strategy and everything, right? It's not about, oh, I've won 8 trades out of 10. I don't care. I could win 1 trade out of 10 and still be profitable. It's all about percentages. So anyways, guys, that's my rant for the day. I always have to do one. It seems like that's just a theme for me. But anyways, so what we understand about AUD/JPY is that we've come up into a higher time frame level of supply. Well, it's really a lower time frame level of supply, but we can see clearly that if you just follow basic structure, right? We're gonna go common sense here the whole entire live session, guys, because that's what it really needs to be. If you're complicating it, stop. Don't complicate things. It doesn't need to be hard. Okay, you need to just use common sense and think, right? God gave you all brains. We can all use them, right? So we can just see basic structure: lower low, lower high, lower low, lower high, lower low, lower high. At what point are we higher time frame bullish? Are we higher time frame bullish right now? No. Why? Because we're still bearish. This is the high that generated this low. Have we broken this high yet? Well, if we can see, there is room between here and here. So the answer is obviously no. See, this is what I mean, guys. I'm trying to use basic common sense here when it comes down to structure, because it's really that easy. We are still technically bearish because we have stopped at this level. I highlighted this level weeks ago. So although we are still lower time frame bullish and we can be looking for buy opportunities to hedge our shorts, right? Could it break? Yes, potentially. Why? Because higher time frame, we're extremely bullish. Okay, and we've come into a prior level of demand, higher time frame. We can see that's why we have this line. We still have liquidity on a lower time frame. So with that being said, it's sort of tricky because the lower and the higher time frames are not really in alignment with each other. But I actually really do expect a higher high here. I think that we can make higher highs. Now, if you're not quite sure, but you have setups in both directions, like let's just say you had a setup from in here, you could sell it, but then buy it with the lower time frame trend and hedge your position if all of your rules are being met. You don't just hedge positions just because you want to hedge a position. You only hedge when you have a buy and a sell opportunity that meets all of your rules and all of your confluences. So we have to treat each trade like it's its own, right? So scaling into the 1 hour time frame, we can see excuse me, we can see accumulation, higher high, higher low into demand, accumulation again, higher high, higher low. So we had 2 levels of supply, or really, well, demand that turned from supply to demand. This was the previous swing point, because within the counter trend, expansion, pullback, came into this level of supply and we failed to generate the lower low, which flips from supply to demand when we generated the higher high. So we have two levels of demand here, one right here and one right here. And we can see that it only came into the first one. We scale into a lower time frame. You can see that price generated a retail trend line. So retail was probably buying with this trend line, swept the liquidity, and then made a move to the upside. So the reason why I have two positions here is obviously, you know, we're not always going to have a deep retracement every single opportunity, right? So not 90.000, it's a psychological level. It's really just in discounted price, kind of in this level of demand here where we broke the counter trend structure. So that could be an opportunity next week. We also could dig deeper into the lower time frame imbalance. That's just straight buying volume between here and here, right? So that's where this counter trend flipped from supply to demand when we broke the counter trend structure this way. So that's an opportunity for us to get in as well. So two opportunities there. Again, you know, split up your risk if that's something that you'd be interested in. But we are technically still bearish. We have to just be careful. But I'm seeing across the board, XXXJPY is looking to go long. And we had another beautiful trade that we discussed last week from this level. Now we had two levels. We had one right here. This is more of an, this is more of an intermediate level. So this is an intermediate level of demand in which if price didn't have a full retracement all the way down and we just kind of trickled and then just kind of continued like that, then we have those intermediate levels of demand to play off of. Obviously, we split up our risk, and what we can do is simply just place half risk at this level, and then the stop loss would go at the secondary position. So I got tapped out of my first position and tapped into my second. And now the winner of this trade here is totally taking care of that loss that I incurred. I'm in net profit on CADJ. So still holding our positions from last week. From this level of demand in here, we can see that we made a high, we made a low, we made a higher high and a higher low. So that was that level of demand that we highlighted that we wanted to take longs from, because that was the fulfillment of the imbalance, because we can see imbalance is right in here, straight buying volume. And we've already taken care of all the lower time frame levels of demand in here. All of it was taken care of. So that was our most highly probable zone. It's also into discount. If we fib it from this low to this high, we're not playing off of fib levels, guys. That's all retail. It doesn't show anything. It's just a tool to kind of just identify premium and discounted price. So this is discounted price. And we had a head and shoulders. We talked about this last week. Had the head, the shoulder, the head, and the right shoulder. Very, very equal in terms of the distance in which it pulled back. And then we faked out to the downside. So when retail looks at this, they're like, okay, retail head and shoulders, I'm going to sell it below the neckline here. Okay, great. Cool. You sell it, I'll buy it from that demand, and then we go long. So we accumulate, and then price goes long, and then we had the opportunity to pull back into two areas of demand. We had two of them, and now we're in profit on this one here. The reason why we're continuing to buy is because, you know, first of all, we swept sell side liquidity and we broke the counter trend structure. So we've been making lower lows, lower highs, lower low, and we made a higher high. So we can continue to buy counter trend as we are currently in this pullback phase. But overall, within sort of this overall move, we can see this structure was broken. And now we could potentially be making lower lows, lower highs for more of a, you know, higher time frame retracement, right? So with that being said, we need to be identifying our higher time frame objective, and that happens to be at 104. Right, this last buying volume, this area of supply. Why is that supply? I mean, just make it simple for yourself. High, low, high, low, high, low, high, low. We failed to generate the higher high within this uptrend, and that's where we stopped and made the lower low. So, you know, I'm not telling you guys to be selling here. I'm just saying for our buys up to the upside, that's where we can be looking to take profit. Okay. Because we could have a reaction from this level, or we could come higher up into imbalance in here just to kind of test this area of supply in there. So we'll have to be careful if we're looking for shorts. But anyways, current direction is bullish. We scale into the 1 hour time frame. We have 99.5 psychological level and 99.2. I sort of picked 99.5 just because that's really where the imbalance started. Yeah, right. So just getting back down to that psychological level, and then also this last the start of the last selling volume, which was right here, 99.20, just getting deeper down into discount before continuations to the upside after we broke the counter trend, coming into our level of demand here. All right, so that's what I'm looking for overall kind of on the yen. So XXXJPY looking for continuations long. Chef JPY is sort of the same deal. We touched base upon this last week. I said we had an opportunity from our intermediate level of demand here. We had the reaction, but we didn't have the follow through. We ended up coming down into our second and third levels. So this was on half risk, and this was on quarter and quarter risk, so a total of 1%. So we lost half risk here. We got triggered into both of these quarter risk positions, even on this one here on Friday. So I had a great entry, and my stop loss is still below the low just because we could sweep Friday's low, which is right here, and come deeper down into this demand prior to going long for the week. So it just depends on what the market wants to do. But higher time frame, what we'll notice is that even though we are bullish, and we have our higher time frame objective here at 158.45, if we just zoom out to the higher time frame, the price will load for me. I don't know why it's not. Here we go. Actually, let me go to the weekly. It's always nice to see where we're headed, right? It's always nice to see, you know, where price could come into on the higher time frame. So if we look at the weekly, this is pretty much all-time highs. This is 1980. I think we may be taking out all-time highs. I mean, we were very close to it. I think that before any significant retracement can occur, we might actually take out that liquidity zone, maybe come up into 160, right? So with that being said, we have to look at the lower time frame structure, which we have setups for in here, right? This is all the lower time frame structure. We can continue to follow the lower time frame just like we're doing, right? But if we get a higher time frame pullback, just wait for things to load. I don't know why things are taking so long today. Sorry, guys. If we look at the higher time frame, we'll notice low, high, but intermediate, high, low, high, low. We could see something like this, right? So this is more along the lines of like higher time frame structure. This is like semi higher time frame. And then this is lower time frame. And as long as all of those time frames, I say time frame, I'm on the 4 hour, but you get what I mean by time frame, like a higher or lower view or perspective of price, right? So that's kind of how we can look at it. So we have higher and lower time frame zones of interest to where if price ends up breaking a specific level, like if we come lower, if we break the lower time frame, it doesn't mean we should be looking for pullbacks to short. It means we should be looking for potential opportunities to long from our higher time frame levels of demand to continue with the overall structure. Understanding that the overall objective lies up here, we haven't reached that yet, and the probability of us coming up into that is quite high. So therefore, we need to be trading with the overall trend at least up into that level, right? And once price hits that level, then if we see any more buy opportunities, I wouldn't say no to them, but we just have to be careful because that's a significant, that's all-time highs. So we could easily see, if we even take that out, we could see a significant retracement. And I'm not telling you guys to sell it here. Please do not sell it at that level. That would be stupid. But what I'm trying to tell you is that if you're trying to continue to trade with the trend and you have another buy set up after the higher time frame has been taken out, it's not to say that we can't go long. We're bullish, so easily we could, but you know, maybe reduce your risk a little bit because we could have that overall retracement, because technically above these areas of liquidity is usually where you see profit taking, some relief on price, and just stuff like that. But again, that does not mean to just sell it at that level, guys. We have to be smart. Euro AUD. So Euro AUD is a little interesting. From a higher time frame perspective, we zoom out, we can see that this high here has not been taken out, and I think that that's where we're likely to head. I think that we can go long. We are currently overall bullish. We have a huge wick that can be filled, so higher time frame continuations. We may be in for a little bit of a retracement as we're seeing now. So what could happen, and I'm just going to monitor this. We have a few areas of interest in here. Remember, we generated a lot of liquidity. We sold to buy, and we never ended up pulling back into that for continuations. I think this may be the opportunity where price sweeps some sell side liquidity here, here, and here, maybe coming into this level. Maybe if it digs a little deeper, sweeping sell side liquidity and coming down into our original areas of demand. Possibility, we just have to keep an eye on it, but counter trend, if we take a look at what's going on in here, 1, 2, 3 touches. We had the fake out, right? Enticing buyers above this retail trend line. And then we came back down, we repriced and we shorted off. We actually came up into this 2-hour time frame area of supply right in here, nicked into that very nicely. So area of demand, higher high, higher low, failed to generate the higher high and instead rolled over and made that lower low. So this will turn into supply now. So we could be in for a potential counter trend sell opportunity if price comes back up into that level and shorts off. But we also have to pay attention to the higher time frame. We are still overall bullish. So, we'll just have to see. And I really don't, this is not one of my favorite pairs. I just wanted to kind of discuss the overall, trend direction. We're looking to come back up into at least 1.683 most likely. So that's really our objective point. So looking for higher time frame continuations long, but short term, could we see some lower prices before going long potentially? So just wanted to quickly show you that. Same sort of deal with Euro NZD. I think that before we continue long into 1.83, that's really our overall objective level. The reason why that is, I'll just kind of go to the daily here. For one, we're still very much bullish. Two, 1.83 is a psychological level, and if we zoom to the left, we can see that this was where all of these highs are located, right? So a lot of liquidity resting above those highs around 1.83. So I think that can be taken out, and liquidity is taken out with momentum, right? The momentum is to the upside. The trend is to the upside. Liquidity is often run in the direction of trend, in the direction of momentum. However, the reason why I have this box here and the reason why I came into it so nicely is because if we scale over to the left, it's a prior level of supply. I'm not going to place too much significance on this level of supply here. We did sweep that high to the right, but overall the trend is still bullish. But if we were to go short, remember we had that counter trend opportunity on Euro AUD. Same thing with Euro NZD. Could we potentially short off prior to continue long? Yes. Well, let's look at the structure. So we have a high, we have a low, we have a higher high, we have a higher low. This is all one expansionary move. This is all one higher high. So technically this could be a higher low for a higher high, right? We're still following the trend. So what's significant about these regions of price down here? Why do we have these risk to rewards? Again, this is just to show you where the potential areas can be. That does not mean that I'm taking these trades. This is not signals, just a reminder. So if we go to the lower time frame, we look over here, we can see that why did price stop there? Okay, obviously it's demand, right? But why did price stop right there? Okay, it's a psychological level, yes. But why do we know that? Well, if we look low, let's just say we didn't have this here, okay, and we were doing this from scratch. What do I always tell you guys to look for when we're looking for overall pullbacks into a level of demand or supply? In this case, demand, right? Because we're bullish, we need to be looking for pullbacks to continue to buy. So into levels of demand. Where do we always look in regards to finding these demand levels? The counter trend, the pullback, right? The overall pullback for the expansion, the counter trend, low, high, supply, low, high, mitigation, supply, failure to generate that lower low, higher high. This is supply. We have the reaction will turn into demand. The supply to demand flips are no joke. This is how we can identify where price and structure, where price can come into, but where structure is starting to shift in the areas of interest we need to be looking for. Right? I posted some of these videos on the Trading Nut YouTube channel before. Hopefully you guys watched it. That supply to demand flips video. It's very powerful. I would just recommend keeping up with those videos. They're not just for me to just post just to say hello. It's for me to give you guys education. And it's very helpful for you guys to keep up with this because, it just is. It's a simple answer. Anyways, again, head and shoulders. Shoulder, head, shoulder, fake out. All right, this was with the news. All right, this is a news event. And for everyone saying news is random, Well, was it random that we came into the exact point in which we were looking for? No, it's always pre-planned. I know exactly where price is coming into. It's easy, right? The news is used as the excuse to sweep sell side liquidity and mitigate that level of demand. And then we can continue long afterwards, right? So equal lows, sell to buy. And then we talked about this level. I gave this out within VIP. There was a repricing down in here. So when price broke the counter trend structure to the upside, or at least created equal highs, we wanted pullbacks into that repricing, mitigation, failure to generate the lower low, higher high. Okay. So that's what we looked for. So again, here we had this level of repricing again. So when we mitigated that level, we sort of repriced, and that's where we broke the counter trend structure to the upside, and that's where we started the uptrend. So I'm looking for price to dig back down into discounted levels. So we can see here that we're just sort of in the middle of this trend here. Right? Price is just sort of sitting in and around this level. Doesn't mean anything. I want to get back down into discount. I want to get back down into areas of repricing. I want to get back down to where price formed the setup to begin with. The huge manipulation, sell to buy, reprice continuation. I want to dig deeper into this level. So I think lower prices are definitely expected. But if price pulls back first, that would be a good opportunity to sell down into the objective point. And why is it okay to sell here? Well, obviously we have to build confluences for each trade. It just doesn't mean that just because we want to be buying from this level or have an overall objective from this level, doesn't mean you should just pull out your phone, your MT4, and just sell it into that level. Because what if price goes like that? Well, then you just took a stupid trade because you were emotional and thinking that price was going to come into here. Again, retail mindset versus professional mindset. Observe your behavior on a day-to-day basis and classify each and every decision that you make based upon, is this a professional decision or is this a stupid old retail emotional decision? And maybe that will help you answer the question of, why am I still not profitable? It's just being straight up. I mean, that's just the questions you have to ask yourself. So higher time frame, or at least within this expansionary move, where did price break structure to the downside? Well, again, what do I always tell you to look for? In this case, this is the overall trend, but in regards to the current trend, this is the counter trend. High, low, high, low, high, low, demand, the previous demand that made the higher high. Higher low, did we make a higher high? No. Where did price fail to generate the higher high? Right here, this reaction. So we could have an overall retracement into that level for pullback or for expansions into that low, right? We have relatively equal highs here. That could be buy side liquidity. On a lower time frame, we have lower low, lower high, lower low, lower high, lower low. So could we have a lower high for a lower low? Since this is the high that generated this low in a lower time frame, this is the current range of the lower time frame. So yeah, that could be the case. So why do I have that level right here? Well, look at the counter trend. I always say this, it's the same stuff, guys. It's just repeating myself. High, low, high, low, high, low. Failure to generate that higher high. Okay. Sellers are starting to control, right? Buyers are no longer in power on the lower time frame, right? So lower low was formed. This is our last buying volume that turns into our level of supply that price could pull back into. And then I also have this line here, and it says 1.77 is a psychological level, round figure. Okay. So I would be looking for price to pull back into these levels first before price coming down into here. If price comes down into here and reacts and starts going long, sells are no longer valid. And I will say that it's not a bad hedge just because we did come up into a higher time frame level. So could we potentially go like that? And could this just be the start of the failure to generate the higher high, lower low? Yes, but we can't expect that because we're still overall bullish. We never should expect price to sell off in a bullish uptrend, right? So yeah, so those are my levels for Euro NZD. Euro GBP had a great, phenomenal trade this past week. I even sent this into the free group for those of you who are in the free Discord community. We said that price is still bearish. Low, high, low, high, low, overall higher high. So many of you were asking me, well, I thought we're bullish now because we made a high and we failed to make a low and a higher high and we're doing that. Well, no, because this is the high that generated this low. This is the high that generated this low. This is the high that generated this low. So if we're going to go long, we need to break this high. Did we do that? Obviously not. So this is just one overall counter trend pullback before the continuations occur. This is just one overall pullback. This is just one overall pullback, right? Pullbacks don't have to be as simple as just one straight line and then one continuation. Sometimes they're choppy. They're like this. They're like that, right? Boom, boom, boom. It's all one pullback because we're staying within one range. All right, so that's why we had this opportunity here. We actually had lower time frame divergence. We swept the high coming into where? The last buying volume. Supply to demand flips. Demand and supply flips. It's so easy. High, low, high, low, high, low. Failure to make the higher high, lower low. That's where we started the downtrend. So where's the last buying volume? Right there. Where did we come into price? Right there. We distributed. We had divergence on a lower time frame. Let me just show you guys. When I see like stuff like this, when I see price just discretely making higher highs or higher lows, or lower lows and lower highs into supply demand levels, I then pull out the VFI tool and see, do we have divergence? And we do. Volume is diminishing. Price is still rising. That means institutions are likely offloading their orders to buyers so that they can short. Therefore, the volume starts to shift. Right? That's why that's the full technical understanding of what price volume divergence is. Right? There's a lot of courses out there that probably teach, volume price divergence, and they're like, oh, it's used for a potential reversal. Well, answer me why. If you can't give the why, you don't understand it, right? It's that easy. So that's what volume price divergence is. It's the offloading of orders in the direction of where volume is starting to head. If volume is coming out of buys and into shorts, but price is still pushing higher, in order to get out of your short positions, or excuse me, your buy positions to then short off, you need someone on the other side of the market to take that order from you. Hence, when they're doing so, price is still pushing higher, but the volume coming into the market for shorts or getting out of buys is more. Sorry if I'm confusing you guys. But that's sort of how we can sort of use that to our advantage to indicate potential reversal formations. And that's exactly what happened. We broke the structure, right? The high, the low, the high, lower, low. So that's why I said last week, I'm like, okay, well, where's our counter trend? Well, obviously this was the counter trend. This was our last buying volume in here because that was the previous level of demand. But then we also had this buying volume right here that failed to come into this level to begin with. So that's why we had two levels. So two levels of interest. We only hit the first one, and then we made a lower low. So we're in really good profit. And where's our overall objective? Because even if we have a beautiful area right here, if price already came into the objective, would we look to sell it? Absolutely not. Why? Because we already came into the objective, which is why higher time frame objective is so important to understand. Again, another video I created within the Trading Nut YouTube channel. I do these for a reason, guys. I just don't pump videos just to do it. I do it to help you guys because it's very important you understand. Because all these little pieces can come together and really help formulate decision making around your strategy. So higher time frame objective is going to be this 4-hour daily level of imbalance, and we understand price is still bullish. We made a high, we've made a low, we've made a high, we've made a low. We've broken the counter trend, we made a high. So this could be a high, low, high, low, high, low sequence, right? Because we're in an uptrend. So the objective is most likely within this imbalance here, and that's where we're headed. So 8,660, we've been looking for this since February of this year. All right, so have we come into this level yet? No. So if we get pullbacks, are sales still valid? Absolutely. 4-hour 50 EMA is approaching our area of interest. So we're being capped by the 4-hour 50 EMA. Good confluence. Daily 50 EMA, again, in that same area. So if we pull back into our zone of supply, it would tap into that daily EMA, 4-hour EMA, good confluence for continuation to the downside to revert back to the mean here. Again, another video I created within the Trading Nut YouTube channel. I create all these videos, guys. I would highly recommend you go back and watch them. They're very valuable. That can really help put all the pieces together. And by no means are, if you just watch one of those videos, it doesn't mean that that's the strategy. It doesn't mean that you should just apply that concept and that concept only. Like I created a video last week about time and price. I said something along the lines of, at the 2 a.m. candle close, we look to do the opposite, right? So 2 a.m. candle close is bearish. We look to buy it for like get in, get out really quick, 10, 15 pips, which that would have easily have hit. But that doesn't mean that that's the strategy. If that was a strategy, that would be too easy, right? That's not what I was trying to say. And I had a lot of questions and people kind of giving me crap for it, saying, oh, this doesn't work. Well, it's not supposed to work 100% of the time. It's just a thing for you to kind of grasp in regards to time and price, in regards to how orders are manipulated. And I even said it verbatim at the very end of the video. I said, you need to be using potentially this concept or confluence with all of your other confluences for your smart money strategy. So of course, trying to do this yourself, just using that concept, is not going to be profitable 100% of the time. I mean, nothing, I mean, just use common sense, guys. Nothing in life is that easy, right? If trading was that easy, the markets wouldn't be the markets. I don't even know how to explain it. Anyways, continuing here. So current trend, we made a low, we made a high, we made a lower low. So we're looking for overall retracements. So we scale into a lower time frame. What we'll notice is that when the structure was broken, we had that last buy to sell, and we kind of pulled back into that previous level of support, and then we continued lower. So where was that last level of demand within the counter trend? Well, we had a high. Whoops, I don't know what happened there. Sorry, guys. We had a high, we had a low, we had a high, we had a low, we had a high, we had a low. So demand, and we failed and made a lower low. So sort of this area of supply was flipped from demand. Okay, so that's what we're looking to get into, that low supply here, in and around that. I guess it's not necessarily a psychological level. It doesn't always have to be, but looking for pullbacks into premium price. But again, if you place your stop here, could price run your stop and go short? Well, yes, because this is the high that generated this low. So if price comes all the way up into here, does this high take out that high? No. So that's technically still lower high, lower low sequence. So either your stop loss has to go here, or you have to place your entry here, and your stop loss could be in and around like this area, and place another short position on the lower time frame. Because if we scale in, we'll see that this is our last buying volume on the lower time frame. This is really where we officially stopped and went, short. We started the bullish downtrend. So entry one could be here, stop loss could be here, entry two could be here, stop loss could be above that high. Right? Let's go to how you can view it in a sense. So that's what I'm looking for in terms of Euro GBP, GBP Swiss franc. G-Chef looks really, really good. So it's interesting because on GBP Swiss franc, and this is the last one I'm going to do, I'm going to take some questions, and then we'll go into the final few pairs. But anyways, it's really tough because we're creating a channel or some sort of range. We're not trending right now. We've created 1, 2, 3 touches of this descending trend line. So obviously there's buy side liquidity. There's equal highs right here. So there's more buy side liquidity. But what we also had was equal lows, or just all of these lows were taken with this sell to buy. And that's when we created a high. We had a pullback, and we failed to generate a lower low below this level, and we broke the counter trend. So within our higher time frame range, we're building confluence for longs because we've swept sell side liquidity, so that's taken care of. We have buy side liquidity here and then the equal highs. Okay, so that's more conviction for longs. When we broke, not necessarily, I wouldn't even classify this as counter trend structure. We're still in a range. But when we made a high, we failed to generate a lower low. That's good confluence for longs. And then we broke the counter trend structure when we were making lower lows, lower highs to the upside. So that's another confluence for long. So that's how we can kind of trade intraday, intra-week with still being in a range, right? So that's sort of the confluences you can be looking for. So anyways, level of demand down in here, we had a reaction from, we'll scale into a 1 hour time frame. Okay, so we had, let's see, if you go to like the 15-minute time frame, you'll see like the last selling volume within here, and we swept these lows as price came into that level of demand. Now, I didn't buy it here because technically we're still bearish. We were still bearish when price was into this level. We could have easily made a lower low below the previous low, but we stopped. We accumulated. And where was our last buying volume counter trend? If this is the pullback, where was the last buying volume counter trend? Well, we had low, high, low, high, low, high. So right in here, if I just pull my handy dandy little tool, boom, boom. Okay, we came back up into that level perfectly, had a reaction, failed to generate the lower low and made a higher high and broke the counter trend. So that will turn into demand. Okay, so supply to demand flip. So anyways, we made a high. So it's just like following structure. Made a high, could overall pull back low, looking for a higher high again. So that's exactly what happened. We had accumulation lower time frame into our overall zone. And then we can see within the counter trend, again, if we're looking for buys from demand, what's the counter trend? What does it look like? Low, high, low, high. Previous buying volume could have made a lower low to continue with this counter trend, but we stopped obviously because we had this level. We already had the mitigation. So we failed to make the lower low and made a higher high. So where's the last selling volume overall? It's just within this region. So let's kind of scale into that and see what we can find. I mean, you can place your order from there. It's not a bad level, 1.116550. But let's scale in even further and find more confluence. Oh, look at where, when we came into that level, look at how price was delivered in and around this level here. We can see that we're starting to squeeze ourselves in a channel, right? 1, 2, 3 touches, 1, 2, 3, 4, 5, and like a million touches here. So this channel, and then we had on Thursday of last week, so 2 days ago, we had a manipulative move to the downside, enticing sellers, also taking the stop losses of everyone who's buying within this channel here. Swept them, came into this last selling volume here that occurred at 2:15 a.m. Eastern time, London session open. London session open, what happened here was we created the Asian session range. We enticed sellers below that low, below that range, and then we made a move to the upside. So now we have to mitigate orders here. That's exactly why we came into that level there. Everything is pre-planned. Everything has a purpose. Nothing in price is random, right? So that really fulfilled the overall sort of accumulation schematic that we had here before flipping structure to go long. So now same thing with, like CAD-J and all those other pairs that we're looking for pullbacks into off of accumulation. We can then look at this as the manipulative level low to mitigate this level. So price is not likely to come below that low, most likely. So first entry could be just at the overall demand. Second entry could just be deeper into this imbalance, maybe with this last selling volume. But overall stops should be either below this low or just below the overall low to be safe. So that's what I'm looking for. Oops, didn't need to do that. That's what I'm looking for in terms of the GBP Swiss franc. Higher high, higher low, higher high, higher low. Now it begs the question, well, what's the overall objective? You always preach overall objective. Where's price going? Well, even if price were to go short, this would have to be one expansion, one pullback, one expansion. I'm not saying this is going to happen, guys, but this is how we can kind of identify areas in which we can be placing our partials levels or take profit levels. I think that price could go long. I really think that we're going to take out this high, take out trend line liquidity, descending liquidity, and go long, and potentially come up into a higher time frame area of supply. 1.2 could be that higher time frame take profit. That would be that swing trade for 1 to 15 and a 1 to 9. So if price is actually going to go short, again, I don't think it's going to happen, but we have to just take that precaution. Could this be a low, high, low sequence? Sure, but where would it sell off from if it's going to in the first place? Well, equal highs, buy to sell, area of demand, so probably in and around that level, anywhere between like 1.3, 1.34, 1.35. So we haven't hit that level yet. So any pullbacks up into that level, which we can take first partials, is still valid. We haven't hit that quote unquote objective point, even though we're not going to be selling from that level, obviously. It's just an area where if price is going to go against us, that's where it potentially could do it. So that's why we need to be taking our profit, or partials at least. All right, so let me see how many pairs I've gone through. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, I'm gonna do one more. I'm gonna do USD CAD. This is gonna be quick because I really don't have much on USD CAD. So I don't have a typical like actual setup right now. But what I said was last week, we have equal lows. We have ascending trend lines. There's sell side liquidity resting below here. So currently the structure is counter trend bearish at least. I want 1.321, that higher time frame demand that we failed to come into here because we created equal lows. So CAD is very strong right now. I'm still banking on that. So I definitely think 1.321 is on the cards, on the table here. Trend line liquidity. We swept it to the upside. Enticed buyers, swept the stop loss of everyone who was selling with this trend line. And then we came lower. We actually came into a level of supply. But anyways, then in here, very quick, there was a level of supply here because we can see lower low, lower high, lower low, just a lower high for a lower low. That's just basic structure, right? But in between the structure, we had 1, 2, 3, 4 touches of this channel. 1, 2, 3, 4 touches here. We faked out lower, right? See this level right here, the wicks, we faked out lower, enticing sellers, came back up, took their stops, enticing buyers above the breakout of this trend line, and then taking their stops as we rallied lower. So that type 2 manipulation that we teach within our VIP mentorship program. So now we know that, where is the counter trend? Well, this is the last buying volume overall. We had 2 repricings. It's not very easily seen here, but you can scale in on your own time if you want. There's an area of repricing here and then that area of supply here. So I said, okay, well, price could come back up into those regions. So last week, this was like before the market closed last week. So in April, that was that level of supply we just talked about. So we generated a high, a low. Again, we did the same thing we did over to the left, but on a lower time frame, type 2 manipulation. We had a low and a high, swept the low first, enticed sellers, came back up, took their stops, enticed buyers, came back down, took their stops. That type 2 manipulation, that sell to buy to sell. So I had 2 levels of interest. I had just the overall buying volume, and I had a lower time frame level of supply in here. So I said that, okay, well, we can split this up into 2 positions, 1 and 2, to get really good risk to rewards here. So the stop loss of the first position was the entry of the second. And then we also had our overall level in here that we talked about before. And that was here. So obviously that's not really valid any longer. So we can really just get rid of that now. Just get rid of that. And then what we have are potential buying opportunities. Because if we broke the counter trend structure, sorry guys, right here, boom, to the upside, yeah, we created a head and shoulders, shoulder, head, shoulder right there. So I thought, okay, well, we could sell to buy into a level of demand here and a level of demand here. So this was a hedge opportunity for me. This met my rules for both longs and shorts because we're not trending in either direction. I have opportunities to sell based upon confluences in here, but also opportunities to buy just in case we do continue with the overall trend, right? So we ended up stopping, rolling over, hit my stop loss here, and this is probably gonna hit my stop loss here, which I don't care because I'm treating this as half risk and half risk. So these 2 are just one trade, and these 2 are one trade, half and half. So if we see here, if I lost half risk here, I lost half risk here, lost half risk here. So I'm only in half risk here. This is a 48 pip stop loss, and I'm currently sitting up like 258 pips. So what's 258 divided by 48? Let me just do the math really quick. Or no, 248, sorry. 248 divided by 48 is 5.1%, but this is on half risk. So I have to divide it by 2. So essentially 2.6% minus a half and a half, so minus 1.5. I'm still sitting up over 1% on this trade. So that's how using risk to reward and splitting up your positions with hedging can be very beneficial. So I don't care that I lost this trade. I don't care that I lost this trade. I don't care that I lost this trade. Now I know the overall direction. Now I know that this is going to be fulfilled. Lower low, lower high, lower low, lower high. The counter trend in here has been broken. We failed to generate the higher high and we made a lower low. So now I fully expect price to continue to take out this low and come down into our objective level. So fine, let it hit my stop loss here. I don't care. I'm still making money on this big trade. That's how we can kind of like hedge ourselves in a sense. So at this current time, I really don't see anything in terms of pullbacks. So let me just kind of clear up this, it's kind of cluttered in here a little bit. Just going to clear up what we're currently in. All right, so get rid of all this. All right, so this is where we sort of faked out. Well, we didn't really fake out. We kind of went long first into our level and then rolled over. So I would say that this is probably a good level in which we would like to see pullbacks into to short. Stops would have to be above the high. But at least we know that, price is likely to continue short. So really, this is just one straight push. I would kind of be looking for some sort of, buy to sell maybe into, this level of imbalance potentially. Just getting back up into premium price, sweeping liquidity, maybe doing a type 2 again, sell to buy to sell, then we can look to pull back and go short into our level. Obviously, this hasn't formed yet. I don't know if it ever will, but if it does, we know the direction, we know our overall objective, so we can take advantage of the lower time frame, intraday, time and price, liquidity run events that could occur, and then take continuations in the overall direction. All right, so I'm going to go over the rest in a little bit. I don't have a ton of time. I have to be off by 12, so I have 59 minutes. Let me just do this. There we go. All right, any questions for me so far? Anything confusing? Anything you guys want to go over? Any questions about the pairs I just went over? Hopefully this is providing you guys some value. Of course, this should be just like a general overview. It should not be signals whatsoever. This is for you to kind of just get some directional bias, prepare yourself for the week, and then tackle the market on your own using the information that's provided here. Bible study tomorrow. Unfortunately not. I have some stuff I have to do tomorrow. And then next Sunday is Mother's Day, so I can't do it then. I'm going to be doing one on May 21st. So for those of you who are interested in a Bible study, I've been doing that. Well, I did the first one last Sunday. It was a great hit. Thank you all for tuning into that. For those of you who got on, you don't have to be a Christian in order to participate. I accept everyone on my Bible studies. I will send the link out close to that time. It's just an opportunity for anyone who has questions about Christianity, who's interested, who maybe has, just anything you guys would like to talk about. I just would like to go over scripture with you a little bit and sort of share my faith. It's really important to me, and I would like to do that for you guys. So very important. Let's see. What about the 884 supply level on EG? Would that be still valid for higher time frame pullbacks? 884. Let me check really fast. 884. So good question. I will address that the first thing I go over after I share my screen again. Very good question, Brian. Another good question. When you're hedging, do you use the same risk on your counter positions as your initial position? Someone told me I should risk 50%. So when I'm hedging, so remember what I said before about treating each trade as its own. So if I'm hedging, my buy positions, I have all conviction for. I have confluences. I have everything that I need. Same with the sell position. I have everything that I need there. So the risk should be the same, because if you're hedging, that means the direction, maybe higher or lower time frames aren't in alignment, but you have setups for both directions. So you could be placing both. So if you're risking 0.5% on your sells, but 1% on your buys, well, what if the buys lose and the sells win? Well, the risk should be the same across the board. Whatever you're risking buy side, you should be risking sell side as well. Because like I said, every trade should be its own. So every trade should have the same risk. Did I go over gold? No, I won't be going over gold ever. I don't do gold. I only do Forex pairs, guys. So currency pairs only. I will not be going over Bitcoin. Please do not ask me those questions. I've said it every time. People continue to ask. May 21st, yes. I'll be doing a Zoom. I'll send out the link prior to the 21st. Probably send it out the day before. Any other questions? I know I've been through a lot or gone through a lot here in terms of pairs. Do you have any questions about anything whatsoever that I've gone over? I feel like some of you guys are just trying to annoy me today. The next person who asks about anything but currency pairs, I'm kicking out. Sorry. I don't want to deal with that right now. Yeah, YouTube channel. Well, what about my YouTube channel? I post a lot of content on the trading.net YouTube channel. We're also coming out with another video for our personal YouTube channel here soon. Yeah, no problem, bro. It's all right. I know it's your first time. It's okay. I just ask, going forward for everyone. I don't trade anything but currency pairs, so that's all right. You didn't know. You're fine. Do you think round psychological levels work? Like in what means? Like what do you mean? In what way do they work? I'm not sure what. That's sort of a very, very, very broad question. See what else we have. Any other questions here? There we go. I already had the first one I kicked out today. I just said it, and people still asking about cryptos. Guys, you're making my life hard. Restaurant numbers are very, yeah. So psychological levels, how I interpret them, they're where large orders are placed. That's where liquidity usually rests. So that's typically where a lot of contracts can be placed. So for instance, like 1.20000, there's a lot of liquidity surrounding those particular round figures. That's where a lot of orders are usually able to be filled, hence where a lot of liquidity rests. So that's where volatility can come into play. So if we have an area of interest, you shouldn't be just trading, like I said before, about just individual concepts. You shouldn't be trading just psychological levels on its own, right? But if a psychological level around figure lines up with a potential area of interest that you have, then yeah, that's great. That's an extra confluence for your overall system. Where can I find your videos? If you just type in, like, if you go to YouTube and just type in Trading Nut, like Nathan, or Trading Nut Ariel Fx, our videos will come up. Or you can just search Ariel Fx on YouTube and it'll come up with our videos as well. Let's see. All right, last couple questions and we'll get back into the charts because I have to go over my favorite pairs. Can't wait for those. I love NZD CAD, AUD CAD. I have some really good setups on those as well. First time here. Yeah, no worries, bro. I get a lot of those questions and I just want to make sure it's very clear to people. I only trade Forex, but no worries. I'm very glad to have you on here. Hopefully you've enjoyed it so far. Do you focus on limit trades to any specific pairs? Do you use all of them based on what you see in the structure? So for me personally, I only trade a very specific number of pairs. However, I go over all of these pairs because different people trade different pairs. So of course, within my community, some people may trade GJ, some people may trade Euro AUD, some people may trade GBP, Swiss franc. I just have to go over everything to kind of align with what everyone is looking for. But again, the same concepts will apply on all pairs. So just because I don't trade maybe specifically GBP JPY doesn't mean it's a bad pair to trade. You guys may love GJ. And the concepts will still be the same. Just like on G-Chef, like I showed you guys, we had a beautiful trade this past week, a long opportunity on G-Chef. I don't really trade G-Chef, but the same concepts that I trade on NZD CAD, which are my favorite pairs, can be applied to GBP Swiss franc, right? So I would say that maybe sticking with 3 to 5 pairs, maybe no more than like 7 pairs, kind of gives you an opportunity to kind of look at a vast majority of pairs and, find opportunities throughout the week, but again, not going and looking at all 26 or 28 pairs to bombard you with stuff to look at. Because then at that point, you're not really specializing, and you really want to specialize just in a few pairs, really understand those pairs instead of, trying to trade every single one of them. Not that being thank you, bro. Not that being a Christian means you're automatically good. Yeah, I mean, there are a lot of Christians out there who, claim to be Christians that still behave and act in a non-Christian-like way. I appreciate you guys. Absolutely. Like I am by no means a perfect person, obviously. No one is. We all sin. That's why we have Christ. Jesus is the way, the truth, and the life. No one comes to the Father except through him. Only he saves. There's nothing we can do to save ourselves. Being a good person does not mean we go to heaven. Going to church does not mean we go to heaven. Christ has fulfilled or completed that mission on the cross when he died for our sins, and belief in him and trust in him and proclaiming him as Lord and Savior of your life. That is what saves. But anyways, that's for another day. All right, we're going to present my screen here again. And we're going to get through the rest of the pair. So quickly with that question, I think it was Brian who answered it or asked it. So you're correct in saying that, is this still valid? I would say yes, because if we look at the structure, right? If this is the high that generated this overall lower low, then this would be the high that would generate the new low below that low, right? So technically this would be the range. So could we have an overall pullback that takes out this high, but still maintains this structure? Yes. Yes, absolutely. Definitely. So I would say that that is still valid from 884 because this is the high that generated the new low. So all of this is just lower time frame stuff. So could we follow the lower time frame? Obviously, yes. I mean, that's what we're looking for, just to continue. But if we have an overall retracement, it doesn't mean we're breaking structure. It just means we're having a deeper retracement from a higher time frame perspective. As long as we don't break this high, we're still good to go for shorts. So yeah, good question. All right, let's see. So we did G-Chef, UCAD. So these pairs I have left. I'm going to quickly go over the ones that I don't have much on. Euro Swiss franc, we've been looking for the same stuff for the past couple of weeks. Euro Swiss franc's stupid slow moving pair. It just moves so slow. But anyways, we're still bearish, making lower lows and lower highs throughout the market. I'm not going to get into the top down. We swept higher time frame liquidity to the upside. We've been following all these levels of supply all the way down. The most recent levels are going to be within here because within the counter trend structure, right? This is the counter trend. This is really that last buying volume that failed to generate the higher high that ended up making the lower low, right? And that was that demand that we came into that we reacted from. So within that counter trend, we had two lower time frame levels. There's a lower time frame. If you scale into like the 1 hour and the 15 minute, you'll be able to see that's a supply level there. And then there's a supply level here. So we're looking at sweeping buy side liquidity. So 1, 2, 3 touches, people are selling with this trend line. There's also equal highs right here. So again, generating liquidity prior to coming up into these levels, very important for our confluences. So trading with the overall trend, I would like to see this low taken out. So 97, 9700, it's also good levels for take profits. So definitely looking for pullbacks into these two regions for continuation short. A-Chef, same sort of deal here. The only thing is we've come into a higher time frame level of demand. So this is just where we have to just be careful because we can see within this huge, remember this huge COVID crash in 2020, sell to buy, we had a repricing, we continued. So let me just scale into that repricing. You can see here across the board, right? Sell to buy, reprice, continue long. So that's that area of demand we've been wanting for quite some time. So we finally came down, into that level. And we're starting to see a reaction from it, but we're still bearish. We're still making lower lows, lower highs. So could we continue short, potentially take out that low? That's a possibility. But we just have to be careful because we did come into that level of higher time frame demand. But it does not say that we can't just continue to follow the structure until it breaks, right? Let's continue to trade with the structure until it breaks, whether it be here, whether it be right now, whether it be, later. Who knows? But I'm still looking for shorts from our levels of supply. If it ends up breaking, then we'll know, okay, higher time frame has come into play. Now we can be looking for pullbacks to continue long. That's how we can treat it. All right, so scaling in really quick. We're forming like on Euro Chef buy side liquidity. 1 touch, 2 touch, 3 touch, 4 touches. I want to run it big buy to sell. That's what I would like to see. Where's the structure? Well, low, high, low. So this is the range. This could just be an overall pullback for continuations. So right in here, this is sort of the intermediate counter trend before the lower low was formed. So right in here, we had descending liquidity. We had a channel, broke out, enticed buyers. We came up into this imbalance and also this inside supply level. We teach inside supply within our courses as well. Very very interesting way of looking at price and how it's being delivered as well. So anyways, we mitigated that level and we continued short. So let's just look at sort of the counter trend. This is our first repricing, and that was where we had our last final repricing event, and then we broke the structure to the downside, as we can see. So those two levels, I was looking for pullbacks into that first level to short. We never got it, but that's okay because we formed the lower low now. So when we have an overall retracement, we can come up into those levels of supply. So where would we be placing our stop loss? Well, I just do it kind of the easy way. First entry, stop loss at the second entry, stop loss at the second entry is above the high right there. So kind of like what I have. We'll see what happens throughout the week. AUD, NZD, I don't really have much on. We're kind of just chilling and waiting for another setup. I had an original setup here. We can see we had liquidity being swept, sell to buy, higher high. We broke the counter trend. We came into a higher time frame level of demand. I'm not going to go through all this just because I've already been over it so many times before. If you guys are relatively new to the live streams and you actually really do enjoy it, feel free to go back and watch some prior live streams. They can be quite long, 1 to 2 hours, but still really good value. I do top-down analysis on a lot of these pairs. So obviously, some of them won't be valid for you to take new trades, but it could be valid in terms of your education. Going back and seeing what worked, seeing what didn't, and just seeing the analysis and learning the terminology and why we're looking for certain things. So anyways, in here, we had that area of supply that we reacted from. So we had the sell to buy, the repricement, man, I'm mixing my words up. We repriced, then we continued long, breaking that counter trend structure. So that was our last level of demand. That's where we came into price. And then we can see in here, we created that mini head and shoulders, and we sold to buy. And then we had a little bit of a demand here. So I thought that would be a really great demand to go off of. I had a lot of confluence with this, and I still lost the trade, which is why it's so important to have, maintain good risk management throughout every single trade opportunity. So I'm still long on this position. I'm still holding this. I was in a little bit of drawdown, stops from below the low. And we can also see here, guys, is actually, I think I got rid of the risk reward. I don't know why. We had two entries, both of them at the same entry. One stop loss was below the demand. The other stop loss was below the overall low. So we can see I lost one of them right here. And I say that because not always will we just react off the demand and go long. Sometimes we may come down, sweep it, and go long. Because think about it. If this is a higher high, this is still a higher low. We haven't taken out that low yet. So it's still structure. Could we go long right now and maintain bullish structure? Absolutely. So that's why we have to have that. So what I'm looking for, I'm waiting for the counter trend to be broken. I really want to get back above this level, that previous high, before looking for pullbacks to long to continue, because then that would be that higher high, failure to make the higher low, higher high, then we can really have conviction for that third drive. And then this would really be a swing because we've come down into higher time frame levels of demand, in which we came into another higher time frame level of demand to the left. So it's just following structure all the way up. So I think that 1.1240, even 1.15 could be on the table here for higher time frame swing. If we come lower, this is our last point of demand down in here. Right, this is where we have that type 2 manipulation, that buy, enticing buyers, coming down into our objective, 1.05, sweeping the sellers, right, enticing sellers below the support, and then going long. So we sweep everyone out of the market, entice buyers, hit the stops, entice sellers, hit the stops. Boom. Now we can continue with the overall direction. So on a lower time frame, there's a little bit of a repricing there. This is that last point of demand. So if we come down into that level, have one more drive into the low, and then go long, this is still valid as well. So either we come down into this level and go long, from a probability standpoint, of course, nothing is guaranteed, but just with my confluences, that makes sense. Or I'm just looking for some sort of counter trend break, and then we can continue with longs. So either way, looking for long setups. Just we'll see what the market gives us to start the week. Okay. I think we have NZD chefs. We have 1, 2, 3, 4, 5, 6. Okay, so real quick here. 80 CAD, I really don't have much on, to be honest with you. We are still bearish within this trend, right? Not going to go through a full top down. Within that trend, we're still bearish. We've been bearish since January of this year. So pretty much for the whole entire year so far. We've swept higher time frame liquidity. We ran it, and we actually came into a higher time frame level of supply, which is why we tapped into that level. That's why I have that big box. But anyways, I think we're still bullish just because, I'll wait for that to load. We came into a higher time frame level of demand to the left. I won't go over everything, but sweep of liquidity, sell to buy, reprice, continue. We had equal lows. We swept the liquidity, came into that repricing event, which is why we had that mitigation of that level when COVID came out, right? It was used as the excuse to mitigate that level. Huge sell to buy, again, reprice, continuation. The counter trend was broken here. Supply, we failed to generate the lower low. Instead, we made a higher high. So that's why we came into, or we were looking for price to come in. Well, actually, excuse me. We came into that price level to begin with. Okay. So we accumulated and we went long. So where was the counter trend broken? Here. Well, low, high, low, high, low, high, low, high, failed, higher high. So that will be that demand level in which if price is going to go long, it should go long from deeper down into here. So we haven't hit that level yet. I'm going to be looking for buys from these levels, but we haven't hit this objective yet. So we know that price is still bearish. We've swept buy side liquidity and now we broke structure back to the downside. So we know that we're at least bearish on the lower time frame, but we haven't reached the higher time frame objective yet, which gives us confluence to at least counter trend short off at least until this level. 88345 would be that first level. We have equal lows too. So we know we're going to go short, but we also have equal highs. So let's look at the structure. Low, high, we swept liquidity, equal highs, big buy to sell, lower low. This is all just one expansion. So where's the counter trend? High, low, high, low, high, low, high, low, failed, lower low. That turns into, oh, it's a terrible line, sorry. That turns into supply. So with that being supply, I would like to see one of two things occur. Overall, we're looking for shorts into this level. So it's either we go like this, sell to buy to sell, and we short it, take profit here, or we just buy to sell. Either way, if we come into this level first and go long, sells are no longer valid. Why? Because we've reached the objective. All right, so looking for shorts, that would be a level of interest I'm looking for to short off from, 914.4-ish, something like that. And overall objective hasn't been met yet, so that's where we're going to be taking our take profits. All right, a couple more. NZD CAD. NZD CAD. Gosh, do I love NZD CAD. I love NZD CAD. It's my favorite pair. I'll say it right now. I always say NZD CAD, AUD Chef, and NZD Chef, but I think NZD CAD is my favorite pair. It just follows smart money so well. It follows structure so well. It's just beautiful in its wave play. It's just a very beautiful pair. So we can see clearly on the higher time frame that we're bullish, right? From this standpoint, from a higher high, higher low standpoint. So if we are to go long, from a discount premium perspective, if this is the structure, we would need to get into discount first before going long, right? So that's why with this counter trend, which is bearish, we can continue to short until we get down into discounted prices. And I have sort of 0.8 psychological level as that region in which I would like to see price come into. Even though we're already bearish, higher time frame, so could we make a lower low? Potentially, but that's okay because we're still looking for shorts anyways. We're still looking to short the market. So shorts are on our side here. This previous high was taken out. You can see just by that wick. So that buy side liquidity was run. We made a low. We failed to make a higher high, and now we're starting at least a pullback phase. So we're making lower lows and lower highs. Okay, so let's scale in here. Wait for price to load. I don't know why it's going so slow. But anyways, we've made a low. We failed to generate the higher high. We made a lower low here. So where's the counter trend? High, low, failed, lower low. So this will turn into our level of supply. So I had one from just the overall level here, and then one on the lower time frame with this last buying volume. And we can see price came into both of them beautifully. This is where this counter trend ended. So again, counter trend, pullback, expansion, counter trend, pullback, mitigation, expansion to the downside. So this is where we stopped, failed to make any sort of higher high, and rallied to the downside and made the lower low. So that was our last buying volume here that failed to generate any form of higher high within this counter trend uptrend because we already mitigated those two levels, right? So that's why I called out this level here and said, okay, 1, 2, 3, 4 touches of this trend line. People are selling So this is just one expansion. We're likely to have an overall pullback for another expansion. This is not a break of structure. It's just an overall retracement. And it would take out buy-side liquidity. And that was a huge news event that came out Tuesday, April 4th. So that was just over a month ago. And we came beautifully into that last buying volume, that last supply zone. That's why we had that trade from that level. And no wonder we reacted from that level so nicely. So again, since this is the overall retracement here, let's look at the counter trend. High, low, high, low, high, low, failed, lower low. Turns into supply. And then we had a lower time frame level of supply right there. So that's why we were looking for that level here initially, but we didn't get it, and that's okay. It doesn't have to hit it immediately, and now we can see that price made an overall lower low. So lower low, lower high, lower low, this is the new range. So we do this, we apply the same concepts over and over and over again. We want price to retrace back into these levels. Price finally does. I don't really see any buying opportunity, but we ended up coming into the lower time frame zone, and we ended up rallying lower. So now we've reacted from the level. We lost on this position because the first order was placed at the first level of supply. The second level was right there. So stop loss of the first entry was the entry of the second. So 0.5%. This is for a 1 to 13 potential. So if we're at 40.5 pips stop loss and we're up, 107 pips, let's just calculate really quick. And now we're just barely in profit. 107 divided by 40.5. 2.64, but that's on half risk because it's half and half. So divided by 2, then we lost half risk there. So minus 0.5. If you were risking like 1% in total, you're still up close to 1%, 0.82%, which it's just, we just had the reaction. We still have a long ways to go potentially into 0.8. So, that's just how we can split up risk and manage positions accordingly. But anyways, we scale into a lower time frame. Well, first and foremost, let me just talk about this channel. 1, 2, 3, 4, 5, 6 touches here. We had 1, 2, 3, 4 touches here. So buyers are going to be buying at the trend line support. Sellers are going to be selling at the trend line resistance. So there's buy and sell side liquidity, which gives me more conviction that, okay, we took the buy side liquidity, we've mitigated our levels, and now we're looking to make a lower low, and now we can take out sell side liquidity. It gives us conviction to sell it down. It just builds more confluence. So let's take a look here. We've made a high, a low, high, low, failed to make that higher high, lower low. So I don't really want to be selling from this level quite yet, just because, I think that we may have a deeper pullback, at least up into, just this level here, really just anywhere between, this imbalance, essentially, this huge selling volume. I think we can dig deeper up into that level. Just within this overall level of supply. Stops would have to go above this high or above that high, either one. So first level of interest would be 8485. So the reason why I have this drawn here is if we just open on Sunday and we just continue lower, well, then at that point, that would be a good level to take price short from in case we just do that, right? So as of right now, I don't want to be selling there. I only want to be selling in here. But if we don't mitigate this right now and we come lower, then that could be a level later that we look to sell it from. And obviously we'll still have that level as well to sell it from too. So we'll have 2 positions. Anyways, just following the higher time frame, when price shifts on the lower time frame, now we can trade with the lower time frame as well. And that produces even more higher probability setups and higher risk to reward trades. All right, we have 30 minutes left. So I want to finish with like 10 minutes so I can answer questions. I only have 4 pairs to go. NZD, JPY. So with NJ, very similar to all the other XXXN pairs, right? So we're looking for continuation to the upside. And we can even just see trend, high, low, high, looking for a low for another higher high. Have we come into any sort of objective? Where is the objective buy side? Well, objective buy side is going to be right here. We could easily make a higher high for sure, but at least if we're going to respect this structure, which I'm not saying this is structure, guys. What I'm not saying is I'm not looking to short it here. I'm just saying if price is going to go short, where would it go short from? It could go short from this level of supply here after the filling of this entire imbalance. So we haven't come up into that level yet. So that's why buys are very much valid from here, because we haven't reached the point at which if price is going to go short, that it could potentially go short yet. which means we still have more room to go to the upside, if that makes sense. So we swept sell side liquidity with that wick. Whoops, sorry, that wick there. So we swept sell side liquidity, and then with this low, high, we failed to make the lower low. We made a higher high. So now we're probably in for some sort of pullback phase, or we just continue on. I don't know. The market right now is just choppy. So there's really no clear direction, even though we are overall bullish. So I guess we could bank on that fact, is we still are definitely bullish and we're looking for buys anyway. So that just adds to the confluence. But if price is going to go short, and I'm not going to be selling it from here, but if it goes short, then it's likely to go short from that level. We haven't hit that level yet. So buys with the current trend, which swept sell side liquidity, failed to make the lower low, shift structure to the upside, at least counter trend short term, buys are still in order until that level is met. And I'll definitely be holding runners up here and way up here as well. But anyways, scaling in. Let's go to the 1 hour time frame. We can see that. Why did price stop here? Well, we came into a level of demand. This was essentially the end of the pullback. Low, high, low, high, low, high. Supply came into that zone, failed to make the lower low, higher high. That was the demand. So that's why we stopped at that level precisely and swept all this liquidity in here, right? Accumulated and then went long. So counter trend, always got to look at the counter trend. We have low, high, failed to make the lower low and made a higher high. We scale in. That was that supply that we reacted from with this low, high sequence. Could have made a lower low, but we didn't because we obviously came into that level. So we stopped from that supply, had a reaction, made a higher high. So that will turn into demand for us, that supply to demand flip. Then we also have this level up here that we reacted from, which was that last buying volume before the overall structure was taken out. So high, low, higher high. We had that reaction from that supply. So now that's why we have two levels of interest. So what do we do with two levels of interest? Well, we've been going over it the whole session. First entry, where's the stop go? I won't answer that question. You guys should know by now. Where would the stop go for this entry here? You guys can answer that yourself. So anyways, looking for that first entry. Hopefully, if we come down lower, I would like to see that sell side liquidity being run. Again, that's really good confluence for us, because if we do come lower, we would sweep that sell side liquidity and come into our levels for continuation to the upside. So that's NJ. UJ, we had a great opportunity, great trade on UJ. We can see that what we've, again, of course, across all the yen pairs, we saw some sort of sell side liquidity run, and then at least the lower time frame is bullish and we're trending up. So this low here was taken out. I'm not going to go through a full top down. I don't really have that much time. But anyways, counter trend, low, high, low, high, low, high, low, higher high. We broke the counter trend. So that's why we failed to generate the lower low, and we started this bullish uptrend. So we swept sell side liquidity. What gave us conviction was head and shoulder, head, shoulder, neckline, faked out with this wick, failed to make the lower low, made the higher high. So that turns into demand, this overall level of selling volume. So that's why we mitigated this level. But what did we do prior to coming into this level? We generate liquidity always. Head and shoulders again, and tight. Whoop, that was terrible. You guys can see it. Shoulder, head, shoulder, enticing sellers below the neckline, mitigating the orders. They sell, we buy. They lose, we win. That's how smart money works. That's why retail doesn't make a lick of sense when it comes down to understanding the financial markets whatsoever. Counter trend, low, high, failed to make the lower low, higher high, supply, reaction, supply, reaction, failed to make the lower low, higher high, that turns into demand. So that's why we had the reaction from this demand here, and that's why we bought it from this level. Also, if we scale into a 15-minute time frame, actually no, it was a 45-minute, I remember now. 45-minute, look and see this counter trend. Low, high, supply. That doji candle provided a nice repricing event. Stops were below the low, or at least below that low. We failed to make the lower low. We made a higher high. So that was our entry last week. So what do? We channel down, generate a head and shoulders again. 1, 2, 3, 4, 5 touches here. Retail tries to buy, and then the buys are swept, meaning everyone who was buying with this retail trend line got swept. And then we had that clear sell to buy into our level, right? To that level. They sell it with the fake out of the trend line, also the fake out of the head and shoulders. They sell it, and then price goes long and we buy it. Right? So now we made a higher high. What could potentially happen? Let me just zoom out here. What's interesting about this is we could react from, this level of demand and go long. The reason why I wouldn't want to just buy it from here is because this is Friday's low, or really last week's low, Thursday's low. So price could sweep sell side liquidity, take out last week's low before continuing along with the overall direction of trend. So with that being said, I would want to wait for one of two things. Either we go like this, just come deeper into this demand, sweeps the sell side, and then go long and break the counter trend and then pull back to buy it again. Or price goes like this, chops around, sell to buy, and we get a reaction. So to start the week, some sort of sell side liquidity run, buildup of liquidity, maybe down into demand, go long, and then we look to buy it. But I'm not going to just be buying it off of a pullback yet, because we could easily take out that low. But if we take out that low, could we also take out these lows? Potentially, definitely. And I'm also seeing this as a potential head and shoulders, right? Shoulder, head, shoulder, fake out of the neckline, maybe deeper down into this demand here to then go long. If you don't want to place your entry here, wait for the fake out, wait for the counter trend break of structure, and then we can pull back to go long, right? Let your confluences build up. There's no point of trying to, if you just think about what the market could do, don't just try to place trades based upon what you want it to do. Let the setups come to you, because the market's going to do what it wants to do. And our overall goal is to react and adapt and not trade how we want it to work out. Trade what is likely to work out based upon the confluences. And the reason why we're continuing to push higher, well, first of all, we're bullish. Second of all, we had 1, 2, 3 touches of this trend line. So that's why I want to see this high taken out. I want to see buy side liquidity run. So the overall objective, there may be no clear overall objective. I mean, there could be. That's the higher time frame level of supply up in there where this structure was broken. So I think that we could come up into that level. But even if there was no overall objective, the fact that we have buy side liquidity resting above there, looking for buy setups are definitely still valid, for sure. All right, so that's UJ. GJ, same sort of deal. Just because we've made, a high, a low, a high, it's tricky, because do we want to just be buying at demand? I mean, could it go long from that level? Potentially, but if we scale in and look at what's actually happening, we have equal lows here. So could we see this as more of like a sell side liquidity run? It wouldn't be a break of structure, just be more of a sell side liquidity run into our original level of demand to begin with and then go long. Yeah, so I'm still holding on to this trade here. I'm still keeping this level valid. So again, first entry, or both entries are going to be at the demand. First stop is going to be just below the demand, just in case we actually do react and go long. That would be a better risk reward. But just in case we have a deeper retracement, the overall stop would be below that low. All right, so splitting up your risk. So that's really the only way I'm going to be looking to trade this, unless, price comes into this demand and we go like this and, sell to buy, we sweep liquidity, and then we break the counter trend structure this way, then I'll look to buy like that. But if a setup like that doesn't really occur, then I'm not just going to be placing my buy limits from that level, because we have equal lows. I'll be looking to trade below that low to sweep liquidity, coming into demand to go long. If we have an overall retracement, like a deeper retracement from a higher time frame standpoint, 180 is the overall objective. We swept massive liquidity, huge sell to buy, took out these equal lows, took out that low, all these lows. We made a high, we failed to make a lower low, and now we're making a higher high again. So the trend is clearly bullish. So that should just be your first indication that buys are in order. But from a weekly standpoint, where could price come into? Well, again, this isn't where we're going to be looking to sell, because I mean, who knows? I mean, this is a weekly perspective. I don't trade off the weekly time frame. I'm not going to be selling there, but since I'm buying with the current direction of trend, that would be an area in which I could take profit because that's our last buying volume before the counter trend broke and we fell. So that's supply, and it's 180 psychological level. A lot of confluence around that level. So that's where I'll be looking to take profit on any buys that I have, right? So where is the higher time frame structure? Well, of course, it's this high, low, high, but we also have high, low, high, low, high. This is one expansion, and this is the lower time frame trend: high, low, high, low, high, low, high, low. So, like I just said before, we can trade with the lower time frame, but also if we have a break of structure below these lows, doesn't mean we're going to be pulling back to go short. It just means that we might be experiencing some overall retracement to form our high, just like we had an overall retracement here. Higher high, overall retracement into our higher time frame demand levels, which are going to be where the counter trend broke. This is the pullback. So where did the counter trend break? Low, high, low, high, low, high, failed. We failed to generate that lower low here. So we have a demand level here that reacted off of supply. So the supply is no longer valid because we didn't make a lower low. We made a higher high. So that's that supply to demand flip. And then if we scale in even a little further on the lower time frame, we'll see there's a lower time frame level down in here, and you guys can do that. It's also in balance. So really just in this general area would be that overall level in which we like to see price pull back into, which is why we have these risk rewards here. But for the short term, could we just continue with the lower time frames trend and go like that? Yes. So I'm looking for these two levels because we have equal lows. But again, on a lower time frame like this, could we go like this, sell the buy, react from something in here, sweep liquidity, break counter trend, pull back along? Yes. So I know I just went through a lot, guys, but that's sort of how I look to view the markets on a day-to-day basis from a simplistic level. And I'm not just looking at the 4-hour and 1-hour time frames. I have my higher and lower time frame zones, but intraday, we could see, who knows? We could see something like a reaction from the level. We could generate, buy to sell to buy. So we could generate liquidity here and here. We buy, entice buyers, come back down, take their stops, entice sellers below support, and then run higher, take their stops, mitigate demand. There could be a repricing event right here. And during like London, New York session on a random Wednesday, we could be looking to pull back and long it from that. But obviously this hasn't happened yet. And I can't tell you if it's going to because today's a Saturday. But throughout the week, we can be looking at these type of setups and just looking for overall trend. So market structure, higher and lower time frame structure, and then just following just basic smart money concepts. Time and price events, supply and demand, liquidity runs, all that good stuff. So this is stuff that we're going to be obviously sending out within our prop firm funded signals group, but also for our VIP members to keep up with on a day-to-day basis to help and aid in their trading. So of course, guys, if you like the way that we break down charts in its simplistic form, just to keep it easy and simple, no need to go crazy and try to break it down and understand every little tiny candle to confuse you. Just keep it simple, right? If you like the way we break down charts, feel free to head over to my website, arielfxtrading.com. I would love to speak with you in regard to how we can best help you if you guys are interested in really looking to take your education to the next level here. So just book a free call with me. We just love to see if it's the right fit for you. If it's not, at least you know that. But if it is, then we can look at talking further about potentially getting you enrolled. So that's GJ. Last one for the week, guys, NZD Swiss franc. So this one's a little bit tricky just because we've seen a significant climb on XXX Chef or Chef XXX, right? So the Swiss franc right now is a relatively weak, but overall NZD Chef is still bearish within this trend. So higher time frame objective point. Yes, we did take out this low, which is definitely something to understand. We did take out that low, so technically we've made a lower low. So when we make a lower low, this becomes the new range now. So could we have a deeper pullback before continuations? Sure. So maybe the lower time frame now isn't as highly probable, right? Because we've finally taken out that liquidity and made a lower low in the market. So an overall pullback could ensue. Again, potentially. But from a higher time frame objective standpoint, we're below the daily 50 EMA, and our first level of interest that I'm going to be talking about, the daily 50 is right there. Could be an extra confluence to continue shorting. 5.3 psychological level, also that previous higher time frame low from 2020, that COVID crash. So we could be looking to take out that low before anything else. So within the current structure, if price ends up breaking to the upside, I'll reevaluate at a later time. I won't be touching it. But currently right now, the only areas of interest that I'm looking for, and we currently are still sitting in these positions. These are more of swing positions. If you guys remember, I'm not sure if I discussed these on live sessions. I may have, potentially. I probably did, but if I didn't, then all of you VIP members, definitely, I talked to you guys about this. We talked about this level here, had a beautiful trade, had a beautiful trade from here, had a beautiful trade from a lower time frame level of demand to supply flip. You can't see it because it's the 4 hour, but in the 1 hour, we swept liquidity, huge buy to sell, mitigated that level, which is why we have that risk to reward, that one here, that one here. So these three, 1, 2, and 3 are potentially new risk to rewards or new trades that we could take from supply levels here. So let's kind of go into what I'm seeing. Well, right now we can only follow the lower time frame trend. Obviously, we're just going to continue to trade with the trend until it breaks. And if it does, we'll reevaluate at a later time. But the probability of us going short is higher than going long. Why? Because we're bearish. Again, keeping it simple. So where's the recent structure? So low, high, lower low. So this is an overall pullback. This is where we failed to generate the higher high, and that's where we broke and made the lower low. But if we scale in even further on a 1 hour time frame perspective, scale into this pullback phase, this is where we swept liquidity. Huge buy to sell into that level of repricing. That's why we stopped there. That's why we had that original entry. So now, when we broke the structure to the downside and finally ended this overall pullback, where was our last buying volume? Well, we had one right here, and we have one right here. And well, I guess you can say we have one right here as well. So sort of just the, the consolidation and the continuation. That's still supply. So could we react from that level and go short? Yes, potentially. That's why I have that level. But the stop loss is going to be at the secondary position. So if we come higher, which I would prefer if we come up into these levels, this is sort of just an intermediate level of supply. Still not something you should neglect, but not as highly probable. We could catch a trade here and sweeping liquidity, huge buy to sell potential. Or we just continue with the counter trend and we overall retracement into our higher time frame zones, and then we look to sell from there. So stop loss would be at that second entry. Second entry stop loss would be at the third entry. And then the third entry stop loss would be just at the overall high. And that's how we can kind of take care of risk and kind of take care of our positions. Because again, the probability of us breaking this high with market structure being bearish, with all the confluences, with New Zealand dollar being bearish or weak, then the probability of us going short from either one of these three positions is more highly probable than us going long because of everything I just said before. All right, so those are my levels on NZD Chef. So good, we finished on time. We have 10 minutes to go, just as I wanted. So I'm going to answer a few questions, and I'll have to hop off at noon. All right, let's see. All right, any other questions, guys? Any questions for me at all? If you guys are good to go, I appreciate your time. Obviously, for those who have questions in regards to the fund management service that we offer, just message me directly. I won't talk about it here. I just want to get some questions about the stuff that we went over today. All right, let's see. Last question on ZDK. You split your risk into two positions, and your next entry at the first position stop loss. I don't understand, how is that better than just one single trade with stop loss at 85365? So good question. If you're splitting your risk from if we have three positions and you're splitting your risk in thirds, then it wouldn't matter, right? Because having a 3% risk with a larger risk to reward is the same as having a full percent risk on a lower risk to reward, right? So in terms of like math, it would be the same. However, that's not the case here for me in that situation, because, you know, I am that first position from that first level of supply, that would be one trade for me. And then the other two from a higher or from that lower time frame levels of supply, those two that I said, that would also be one trade. So it would be two separate trades, which is why I would be splitting it like that. But another question that you could ask is, what if we do something like this? What if we have, you know, a sell to buy, a reprice continuation, entry is here. So why would I want to have one entry here or two entries at this level? One stop goes here, one stop goes here. So let's take a look at an example really quick. Let's go look at AUD Chef. Excuse me, NZD Chef. AUD NZD. Goodness gracious. So anyways, right here, we have two entries at the same point, at the same level of demand. One stop loss is going to be below that low. The other stop loss is going to be below this low, because if I just had one singular position from this point here all the way down, which is right here, it'd be a 1 to 6.3. Let's take it from a basic math standpoint, right? The probability of us reacting from this level of demand, if it comes down into it, is high. And the likelihood that it takes out this previous low is not as likely. But we still have to, you know, maintain our caution, because we could take out that low and come into that level here, just like we did here. Two entries here, one stop loss below the demand, one stop loss below the overall low. We took out that demand low, but it doesn't mean we took out the structure low. We could easily just go long now. So at least at that point, if we lose the first position here, we'd win on the second. That winner would take care of that loser easily. So we split it up half risk and half risk. So if we come into this zone here and go long, then we're on half and half, but this is a higher risk to reward than this one. So what you would do is, this is 9.37. I'm using my calculator here. 9.37 plus 6.33, but it's on half risk each. So 15.7% divided by 2, you net 7.85% in total if you won this trade here. But if you just had a singular position with just your overall stop loss, instead of placing a half risk each and you just place 1% on this trade, you would only yield 6.33. But doing it this way, we would yield 7.85. So that's how we can increase our risk to reward there. But your question, I'm assuming, is, well, if we have one level here, one level here, one level here, and then stop loss at the first position would go at the second position's entry, second position entry would go at the third position's, or second position stop would go at the third position's entry, and then let's just say the overall high was right there, then the third position entry would go at the stop would go at the previous high. If you're breaking it up from let's say there's 3 entries, 1/3%, 1/3%, 1/3%, then yeah, you might as well just place one entry and then one stop loss, because it's the same thing as doing, you know, higher risk to rewards, but on lower risk each, if that makes sense. So it's all just based upon math. So you're correct in what you said, but I also wanted to go over this particular scenario because that would yield a higher risk to reward than just having one singular position. But again, you run the risk of, if it comes lower, just like I did here, taking out the low, but maintaining the structure. But at that point, you're playing a game of probabilities. You're playing a game of confluences, right? So the probability of us not coming below this low is high. So even if we do take out that low right there, still on half risk, that is 6.33 divided by 2 minus a 0.5% we lost here. You're still netting 2.66%. So it's still like a profit, right? It's still a profit. Hopefully that makes sense. Are you tempted to take trades on pairs you don't trade on your personal account because you do analysis on all pairs too? Absolutely not. No. It's all psychology, guys. It's all psychology. You have to have a plan in place. If you're tempted to do certain things, you're not managing your psychology well, and nothing is consistent. If you're not disciplined and consistent in your trading, expect to lose in the long run. So like GBP Swiss franc, phenomenal trade, phenomenal like opportunity. And if you took that trade, great, you would have made money. I didn't take it. But I'm not going to be tempted to take another one that I don't usually trade the next time because it doesn't go with my plan. So it's all about it's all about the difference between an amateur mindset and a professional mindset. You have to have that professional mindset, or in the end, it's all going to blow up in your face. So good question. Sometimes I'm like, oh, I want to take it, but I have to stay disciplined. I have to, because the professional traders stay disciplined in everything they do, no matter how bad they want to do one or the other, if that makes sense. So I'm sure a lot of people would do that if they only trade a set number of pairs and they have another setup that they see on social media, and they could go to that chart and they're like, wow, it's a great setup, and they take it and then they lose. It goes against their strategy, and they lost a trade that they shouldn't have lost to begin with. If they won the trade, well, now that psychology is being changed to say, okay, I won that trade. Now I can go do that for all my other pairs that I see good signals on, or setups on. And then naturally doing that will yield less profit or more losses in the long run because you're not staying disciplined. So yeah, good question, but it's all about practicing professional habits. Yeah, I appreciate the love, guys. Thank you for the support. God bless you all. Hope you guys have a great rest of your weekend. I have 2 more minutes. Any last minute questions? Because I do have to end the broadcast in exactly 2 minutes. Is it more high probable to hedge if we get one of the trade to go? See, I don't know what you mean by that question. The only reason you would hedge is if you have all of your confluences and all of your rules met for a buy setup, and all of your rules and all of your confluences met for a sell setup. That's the only way you would hedge. If you don't, then you don't hedge. You don't hedge just to hedge, because it's again not the professional mindset. Because if you're hedging, if you're looking to buy and you're looking to also short because you want to hedge, well, is that short setup valid? If the answer is yes, then yeah, you can hedge it. If it's not, then don't, because that sell setup isn't valid. You only hedge when you have both setups that meet your rules. Treat each trade as a separate trade, as its own thing. Because sometimes what I'll do, sometimes I could buy Euro USD and sell NZD USD. Are they correlated? Yeah, but I have a setup that has a buy setup and I have a sell setup on another trade, right? I just go with what meets my rules and follow my system and attack the market the same way, because who knows? If I say like, oh, I'm looking to buy EU, but I'm looking to sell NU, well, which one should I take? Because I don't want to trade because they're correlated, because I don't want to, I don't know which one's going to lose. And if I take one of them and not take another one, well, that other one could be the winner, and I just missed out on everything, right? So you have to attack it based upon your trading plan every single solitary time. So yeah, one of them will probably lose and one of them will win, but it's also a natural hedge if you have good risk to reward. And I manage the trade like it was its own trade. If I was just in one of those trades, I would just manage it like that. A lot of when people lose in this market, it's really not about not understanding the strategy. It's all psychology. It's all about psychology. It's not your strategy that's bad. It's not you're not understanding what you need to do. It's you just not doing the little things right or maintaining good psychology. That's what kills traders, just in general, right? So how do I stay looking good, stress-free while analyzing and engaging all the markets? Just practice. I mean, I've been doing this for 6 years, so just you've had 6 years of psychology and working on that, then it just becomes easier. And it's also, you just have to tell yourself, look, like managing your psychology is the most important thing you can do in trading. So it's either you have to just come to the realization that either you have to sit down and tell yourself, I have to be practicing the right habits, or I'm going to lose in the end. Even though I want to over leverage in this position, even though I want to get back to break even on a losing trade, I want a revenge trade, I have to step away because psychology is the most important thing. So you have to just be real with yourself. And you have to understand that if you don't do the right things, it doesn't matter, you're not going to make any money in the long run. So I've come to that realization a while ago, and it's a constant battle because we're all humans. We're all emotional creatures. So we naturally all have psychology. I still deal with psychology, but it's easier for me just because I know my system works over the long run, and I don't care about losing trades in the short term. It doesn't matter to me. And I've just had a lot of practice with it. So, but that's why we include it as a part of our course material. We have one of our courses is filled with psychological stuff. So it's its own psychology course. So those are, we tried to hit on every single part of our strategy as well. Not just the trading strategy, but also the other things. Psychology is also extremely important. But anyways, guys, I thank you so much. I appreciate your time. Thank you guys so much for a great session. Hopefully you learned a lot. If you have any questions, as always, just reach out to me at the end and reach out personally. Be happy to help in any way, but I do have to run. Thank you guys so much. Enjoy the rest of your weekend, and we'll see you next time. Take care.